Good morning, guys. Good afternoon, good evening. At any time of the day where you are actually viewing this video from. So, I don't like wasting time. I like going straight to the point because, as you notice, I'm using my phone to analyze. Now, I'm going to be teaching you guys two indicators I use a lot to analyze. And before I go into the indicators I use to analyze, I want to make this very clear. If you're a trader out there, I don't care if you're a newbie, you're an old trader, I don't care the part of trader you have to understand that the trend of the market is the first. Any strategy anybody is giving you that doesn't follow the trend of the market, that strategy is false. I'm preaching this out to the world. That strategy is false. Any any strategy at all that doesn't have highs and lows, that doesn't teach you break of market structure, that strategy is false. So guys, let's go into the strategy. I just took some trades now. Took some trades, if you can see. So I took some trades. Yeah. So took some trades. So that strategy is false. So what do I mean by that? Let's go into it. Now, if you could see very well, we understand that we are actually in a downtrend of the markets. We're actually in a downtrend of the market, selling, which shows that the river is actually flowing downwards, which simply indicates that we're going for more sales than buy. We don't buy these markets, we're just looking for sales than buys. So if it's indicating that we're looking for sales than buys, we are not supposed to be doing anything that involves buying. So now I'm going to bring you guys to the indicator I use always. I'm supposed to analyze the market in a different way, but let me use the indicator so that you understand. So this is the indicator I use every single time, and it gets the job done. So I know most of you might have seen this before. This is what they call the moving averages. So, but I'm going to show you guys the one I use. The one I use. This always gets the job done no matter what. This gets the job done. If you want to be a scalper, a long-term trader, any of that, this gets the job done. So now the moving averages are 25 moving average and the 9 moving average. This is how it looks like. So you guys, let me go on. Let me check this. The 25 moving average and the 9 moving average. Those are the two moving averages that the market uses. And my time frame is normally the 1 hour time frame. I don't like going down into time frames, like higher time frames. I know most of my videos before but this is the strategy I use. Now, when I say before, first of all, before you can enter any trade, you have to understand what is the trend of the market. And looking at this very, very well, we understand that this is actually a downtrend in the market. This is a downtrend. The market is actually going down. So if the market is actually going down, the first thing you have to ask yourself is the market buying or selling? We understand that the market is selling. So if the market is selling and the moving averages have crossed and are widely spread like this, it simply means there are a lot of sellers in this particular market. A lot of sellers in this particular market. So what do? You go down to a lower time frame, like the 15 or like the 5, and you look for what I call the step ladders. The high, the low, 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 the high, the low. Continuously. That's why I call the step ladder until the market gets to a certain point and it breaks this particular structure, which will happen around here. So when the market breaks this structure and goes to the upside, it simply means this downtrend is finally over and the market is taking a buy. So now, as we are in this particular structure, let me show you guys how you should apply target to the market. Now, the market goes into different highs and lows. So let's go to a 30-minute and let me show you guys something. I don't know the way I teach if people actually understand, but I hope so. Because this is the best way I understand how to do it. And I've been doing this for a while, so yeah. It works every time. It works every time. Every time. I don't care with the condition. Now, I'm sure, and I know most of you are wondering why I'm more like focused on volatility pairs. The thing is that if you can look very carefully in the forex market has not been moving well recently. It's been just been choppy and choppy, and which is not good for a trader. So I know the market is kind of my chart is kind of like a little bit clustered, but I'm getting to a point here. Now, if you could look at this very well, you understand that anytime the market comes to a downside, it gets to what I call a support. But in a downtrend, a support is not really that strong. So it breaks it and retests it and goes down. Breaks it, retests it and go down. Breaks it, retests it and go down. Breaks it, retests and go down. Breaks it. Now it gets to this particular stop, which is actually broken this particular resistance. This is a resistance. Sorry, this is a support. I'm sorry. This is a support in the market in a downtrend. So if it's support in the market in a downtrend, it simply means that this particular market will still sell. Now, this is the importance of these two moving averages. Now, the 25 moving average tells us one particular thing, which is very, very important. A break of this particular moving average, a break of this 25 moving average, right? A break of it totally, a full candlestick break of the 25 moving average tells us that the trend of this market is over. It's no longer in the downtrend. I don't know if you get me. It's no longer in the downtrend. If you are moving support and resistances, it will show you, but it will not be as fast as the moving average will show you. I know some people complain that the market lags, but that is one of the importance of these two moving averages here. If it's going down, it will show you immediately it is ready to change in the market. Show you how immediately it's moving. Now, a crossover of any of this particular moving averages shows you your entry criteria. So if you see there's a crossover here, so there's an entry here. There's no crossover, there's no crossover, there's no crossover, there's no crossover, there's a crossover over here. It will indicate that you should get out of the market for the meantime, and you can enter into the market. Now, looking at this particular crossover, this is what happened over here, this is what happened over here, and this is what happened, and this is a downtrend. So getting an entry down from this particular place going down is a very good entry criteria. So I'm not trying to tell you that your normal analysis without indicators does not work, but sometimes a lot of people look for more confirmations in what they do. Like me, I look for confirmations because I don't have this kind of large amounts I could play with. Why some people have the huge amounts that they could play with and give their own analysis based on their thoughts. But as for me, I look for a lot of different biases to actually get into the trend. So I'm dropping videos now every single day. As every single day, I must drop a video to just to put emphasis on how the forex market is not actually in a right space presently. That most people should move from forex market to synthetics or to the crypto market or to the stock market, because the forex market is not really trending presently, and we could wait while making money off of all this market before the time gets there. So thank you guys for watching the video. I don't want the video to be much long. Thank you guys for watching the video, and peace out.